Welcome. Welcome to everyone attending. We are so glad to see you here today. And thanks for joining us today for our Mission and Money 2026 Tax Changes That Matter webinar and CPE. I'm Heather Johnson, an accounting and advisory partner. Oops, sorry, one second. Okay, great. If you're new to Han Group, welcome. We're a public accounting firm that's solely focused on nonprofits. That's our mission and our passion. We're happy to have all of you here today as part of our nonprofit community. You see this QR code on the screen. If you want to click it to join the community, we'd love to have you. Please feel free to ask questions today throughout the chat and join in the conversation. And thanks to those of you who've sent in questions in advance. I think you'll be happy to see we're going to cover a lot of those throughout the presentation today. And we'd love to hear your thoughts throughout the presentation, especially since a big part of today's topic is the big, beautiful bill, and that's just taken effect. So we're all still figuring it out. We're also figuring out how it's going to impact donors and our nonprofit organizations. For any accountants that are joining us today, this webinar does qualify for one CPE credit. In order to get the credit, you'll need to answer at least 3 polling questions throughout the presentation and complete the survey at the end to get the credit. Everyone, though, is welcome. Even if you don't need the CPE credit, please feel free to reply to polls and the survey if you'd like. So before we get started, I'd like to welcome Michelle Johnson, who is no relation, but from the Association of Fundraising Professionals Advancement Northwest chapter to say a few words. So welcome, Michelle.
Hey, thank you. Thank you, everyone. Thank you, Han Group, for collaborating with us and putting together what I anticipate will be a very informative and great conversation. This program has had probably 3 different titles because we've tried to trick you into coming to a tax session. So thank you for joining us. My name is Michelle Johnson. I use she, her pronouns. I'm the co-chair of the program committee for AFP Advancement Northwest. I use she, her pronouns. I'm wearing an orange blazer with a black dress underneath and blue glasses. Today's event is being held remotely. If you are tuning in anywhere from the geographic territory of AFP Advancement Northwest, and you are also tuning in from occupied land, we are on the ancestral lands of the Coast Salish people, including the Duwamish, Susquamish, and other tribes. We honor their enduring connection to this land and express our gratitude for their stewardship over many generations. We strive to uphold their legacies of resilience. Find out whose land you're on. I'm going to put a link in the chat. And remember, acknowledging whose land you're on is just one step in the conversation. Do more to figure out whose land you're on and what you can do to support your local communities, your local Indigenous communities. And if you are an AFP member, we welcome you and thank you for joining us, being a part of this free webinar. For those of you who are not part of AFP, you can learn more at the other link I've posted in the chat. I'm done with all of our groundkeeping. I'm in rules setting, so I'm ready to hand it back over to you, my non-sister Heather.
Wonderful. Thank you so much, Michelle. And we are so excited to collaborate with your group today. I am also very excited to introduce our speakers. We have our returning panelist, Jennifer Lee Dotson, who's a strategic advisor of AI in fundraising. And Jennifer, you and I have done several webinars now, and you put the fun in fundraising. I'm just going to say that.
Well, you have been an amazing partner in this. And if anybody can keep anybody awake when we talk about taxes, it is you, it is Graziella, and it's Deep. So let's see how we do.
Excellent. And I am also very excited that our nonprofit Han Group tax team leaders are with us today, Graziella Rhodes and Deep Master. You'll be hearing a lot from them today. They are the ones who are really in tune with the tax requirements. So now that we've introduced the speakers, they'll speak in a minute, but now that we've introduced the speakers, we'd love to know who our audience is representing. And we're going to issue that first polling question now. So, what we'd like to know is which option best describes your current role? Are you a not-for-profit employee of a C3, a not-for-profit employee of a different organization, professional fundraiser, member of AFP, a CPA, or other? Jennifer, what's your guess? Who do you think we'll have the most of today?
I'm thinking that the fundraisers are going to dominate this conversation, but I don't know. It might be interesting to see the results. Come on, fundraisers, hit that button, smash it,
I
smash it.
I know. I think this might be a popularity test. I'm not sure because I feel like our Han group uh community will be largely the C3 community. What do you think, Deep and Graziella?
I agree.
Yeah, I
Yeah,
agree.
I
okay.
agree. C3's.
Yeah,
Okay,
C3s.
but I'm loving seeing so many members of AFP here today too. That's fantastic. Outstanding. Okay, great. Lexi, are you okay? So Lexi is sharing the results, or I share it. So it does look like so far the biggest percentage, 47%, are from 501c3 organizations, followed closely with 26% of professional fundraisers and members of AFP. So welcome everyone. Oh, and April Johnson, who I don't know, maybe we only talk to Johnsons here because now it's Michelle, it's me, it's April. But April made a great point that many of us are both professional fundraisers and 501c3 employees. So you're right. Thank you, April. Okay. So now that we have done that, I'm going to, since this is for CPE credit, just quickly talk about our learning objectives. And today's webinar serves to focus on the 2026 tax changes that will impact our nonprofits. And especially, I'm sure what you've all been hearing about is the big, beautiful bill. We'll also address topics like political activity, unrelated business income, and risk. These aren't necessarily new to 2026, but we always like to give a refresher on these important topics when we do a tax webinar. And just a quick disclaimer, while we are nonprofit specialists, we're not attorneys, and today's discussion isn't legal advice or individual tax preparation guidance. Your facts matter, so always consult your own advisors for advice specific to your situation. So, Graziella, are you ready to jump in and talk about what's probably on everyone's minds, the one big beautiful bill?
Sure, why not? First off, thank you for inviting me here today. I'm thrilled to have the opportunity to speak to everyone with regards to the nonprofit community, as I've served proudly this sector for most of my career. The 3B encompasses lots of new regulations, but what we're going to focus on today is what affects the nonprofit solely. The bill came to life July 4th, which is not that long ago, and it's effective for tax years beginning January 1, 2026 for most of the regulations. That minimal time frame really didn't give much time to plan. So at this point, if the nonprofit hasn't already evaluated their donor base, budgeted for tax rate changes and calculations, determined replacement funding for federal government reductions, which is actually a separate issue, but also projected out the effect for the next few years, then this class should be very helpful to you in getting started. Keep in mind that not all organizations will be affected the same. Depends on the structure, the funding, programs, budget size. So some organizations may be affected minimally by the bill, while others may be at risk. The bill, as in the name, includes the word big. Not only does the budget need to reflect the financial changes, but the board of directors needs to buy in on the pivoting. The development team needs to write and rewrite text for fundraising purposes. Perhaps there's state charitable registrations that need to be considered. The effect on public support needs to be calculated. Programs may need to be eliminated or changed or adjusted. And also relationships might need to be solidified. So there's a lot of different facets to be considered. And what the 3B does to nonprofits, specifically donations, is, I think, going to be the most impactful piece of the legislation, as it affects both individuals and corporations. Individual contributions are expected to increase while corporate contributions may decrease. And the main changes that occurred is that going forward, non-itemizing taxpayers now get an above-the-line deduction for contributions given. Itemizing taxpayers continue to deduct contributions, but only to the extent that it exceeds 0.5% of adjusted gross income. And unfortunately for corporations, now they can only deduct contributions that exceed 1% of taxable income. That's the donation part of it. There's also excise taxes on endowment income for educational institutions that are now on a sliding scale. It's applied to an endowment balance to student number ratio, with the most prestigious universities and institutions paying the higher rates. There's also changes to executive compensation rules that now require the nonprofits to pay the 21% excise tax on all employees compensated over $1 million, not just the top 5. There's also scholarship grants and tax credits. The details on that are still being worked out to try to figure out which institutions are going to qualify. And then last but not least, Heather's favorite, she's now in heaven, knowing that for 2027, the Form 1099 threshold floor will be $2,000 instead of $600.
Thanks, Graziella. Hi, everyone. My name is Deep Master, and I am a tax manager here at Han Group. I'm happy to be on the panel today to talk about tax compliance and upcoming changes. So as Graziella said, there are huge changes in this bill, and perhaps the largest since the Tax Cuts and Jobs Act of 2017. For nonprofits, the same key issues continue to be important. They include, but are not limited to, staying true to your tax-exempt status, even while diversifying revenue streams and donor bases. And 2, maintaining transparency and following best practices that protects the interest of the public, and most importantly, maintains positive public perception.
Great, thank you. And since we know this bill may impact individual and other giving, let's do another polling question now. So polling question 2, where do most of your donations typically come from? Individuals, corporations, foundations, government, a mixture, or not applicable? Jennifer, what's your guess? What's going to be the highest?
Well, again, if the fundraisers have stayed awake long enough to answer this polling question, I'll be totally surprised. But my guess is individuals. You and I actually, didn't we actually have a bet going on the results for this? Okay,
Yes,
so
we did.
I guess individuals. Somebody's very vocal about this as well.
I know someone's fired
Okay.
up.
I have submitted. I am awake. I have made it this far. I am awake, and I submitted my answer.
I'm proud of you. I'm proud of you. So Jennifer, you were right. 37% individual. So it's interesting when Jennifer and I were talking, when we started talking quite a while ago, she was saying definitely on the AFP side, it's individual. I will say on the Han Group side with our clients, I think that it's for the majority of our clients, it's more foundation side. Um, but individuals are, a huge market to approach as well. I have felt bad for my nonprofits that get a lot of government money just with all of the changes. And we've been talking a lot this past year about diversifying revenue, not only the donor base, but also even revenue streams. So, because of that very reason. So, it's good to know, though, that we have such a large concentration of individuals because I think that that's really the biggest impact of the big, beautiful bill that we've talked about, right, Graziella?
I agree. Well, let's start off and let's start talking about the changes to individual giving then.
Wonderful.
All right. So regarding individual charitable giving, so historically only taxpayers who itemized deductions received a tax benefit for charitable giving. That left a large portion of donors, especially the middle income households, without a direct tax incentive. Now, individuals who do not itemize can still receive a tax benefit through an above the line deduction. This effectively brings the charitable tax incentives back into the conversation for a much broader group of donors. In terms of the
Thank
thresholds,
you.
You're
so the
welcome.
deduction
Oh,
is
I'm
just
so sorry.
It's okay. All right, Deep.
all right. So in terms of thresholds, the deduction is capped at $1,000 for single filers and $2,000 for joint filers. It's not unlimited, but it's meaningful, especially for consistent and modest donors. However, for someone in the 30% tax bracket, this could mean up to $900 in tax savings. That's real cash flow impact and something donors may not realize unless nonprofits help educate them.
For the donors who itemize, the bill really doesn't change the fundamentals of charitable giving. It still remains effective, flexible, and it's still an important part of year-end planning. So as we said before, we're not individual tax preparers, but we sense that the high dollar donors may change the way that they donate by gift bunching, for one, which is concentrating multiple years of gifts into 1 year, by using donor advised funds, DAFs, for DAFs for timing and flexibility, and also donating non-cash gifts such as securities, complex assets, properties, etc. The big beautiful bill reinforces, it doesn't replace the need for intentional planning. For nonprofits, this means that for the major donor strategy, that should mostly stay intact. The opportunity is more towards the education of donors, not policy change. So fundraisers will especially want to encourage conversations with advisors and avoid the one-size-fits-all type of tax messaging.
I will add too, I do see that Kathy said, I don't think this is likely to have a significant impact. And Kathy could absolutely be right. What happened in I think it was 2020, I don't remember exactly, but during the COVID period, they did this type of above the line tax deduction for a brief period. It was temporary, and there was an increase in giving, not a significant increase, but there was an increase. So we're wondering now, doing it again, I would assume you would probably get that same increase. And then if there's an educational rollout about it, it could be even more. The truth is, though, and I'm sure, the fundraisers, you guys know the best probably, but a lot of people give because they want to give, right? So it's just a matter of deciding, are they giving for the tax break, or if they are, then this will increase the giving. If they don't care about the tax break, then we would assume that the giving would stay the same. It wouldn't decrease. The exception will be corporations when we talk about that later. Um, let's see. So when we're talking about this education program to our donors, we have some verbiage that we recommend that you could say in your either, speaking or in your written policy. And really the takeaway is that it could have a benefit, right? With taxes, with anything, we never want to say it will absolutely reduce your taxes. It will definitely guarantee savings. But, we have some wording here. You may now be able to receive a tax benefit. Many donors will receive a tax benefit. Your gift supports our mission, and it may provide additional tax advantages. Jennifer, what are you seeing? Are you all talking about rolling out this type of education already? Is it still something to think about? What are your thoughts?
Absolutely, 110%. Yes, we've actually, as soon as you and I started talking about this last year, we had several nonprofit fundraising folks approach us for just strategy ideas. How is it, how is this going to even affect what we're doing in terms of donor language and donor communication? So for those of you that didn't know, the origin story of this started last year when the One Big Beautiful Bill Act was still in play, and AFP volunteers were seeing this, seeing a lot of the rhetoric, a lot of the chatter come through the channels. And so through the programs committee, we're all volunteers, but we had decided that it would be great to start off the year with the possible sort of things that other folks are doing in their organization. So if you can share how you have maybe are taking advantage of these ideas, these strategies, drop them in the chat. We're all here to support each other. So Heather, thank you again for just even partnering with AFP to put this together. This has been sort of the stress, a little stress that has added to the new year excitement, but we all know that these changes are happening. So thank you.
Our pleasure. Okay, we'll let everyone think about that. If you come back with thoughts or ideas, please feel free to share. Actually, somebody is saying, do you think this will capture any of the donors we lost in 2017? Do we think, and I'm sorry, somebody, I don't know. I don't know the answer to that. I don't know if anybody from AFP, if Jennifer, if you have an answer to if you think this will recapture any donors lost from 2017.
Yeah, well, Michelle is part of our program AFP programs committee, and she's also our past president. So maybe Michelle, if you want to come off mute and elaborate a little bit more on what your question is trying to get at. And then also, anybody who does have questions, please let us know. I think Rita wanted to raise her hand and ask a question specifically to Deep.
Absolutely.
Yeah, so I don't know if Michelle is wanting to come off mute first or Rita. Okay, I just saw Michelle come off mute. You want to elaborate on your 2017, 2018 question about taxes?
Just that when the changes happened, when the Jobs Tax Cuts and Jobs Act happened, we lost it just changed a lot of different things, and we lost a lot of donors who itemized because of the tax bracket changes. And so I was just wondering, it's not a one-to-one thing, but it's just do we think that these changes, this $1,000 and $2,000 for joint filers, will recapture any folks who previously had itemized, et cetera, et cetera? Just a general behavior question. We're not comparing apple to apples, I understand.
Hi, Jennifer. Rita's on the line off mute. May I ask a quick question? Okay, great. So I have one clarifying question, and then I had a second one. So the first one is it the case that the 1099 threshold applies to 2025? It doesn't start on January 1, 2026, and that these new donations, whether they're above the line or itemized, start in the 2026 tax year. Is is that the case, the distinguishment? So if I'm personally doing 1099s right now for my client, I need to only send them out if they're over 2,000, correct?
No. No, for
No.
1099s, it's about the expenses. So the expenses are incurred in 2026. So in 2027, when you file that 1099, it'll be for 2000 and higher.
Oh, so the 600 still applies for the work I'm doing now for the 2025 tax year.
Correct.
Okay,
That's
so
correct.
they both only apply. Okay. So then I have a completely other question that's more for the fundraiser folks because I'm an accountant. Is even me personally, I understand that if I was to donate, if I reached over 72 and a half or something like that, and I could donate part of my 401k or my IRA, and that would be a tax advantage. My question is there any changes to that? And does this community seek people to get funds through a 401k or IRA donation that is a tax advantage to them for their tax return? So I'll come off mute.
I think that's a great question. I don't know the answer to that personally. Jennifer, or, do you have any thoughts about that?
Rita, are you referring to the minimum required distribution? Is that what you're, is that what you're?
Somebody in the chat is giving the correct thing. It's a QCD IRA gift. I guess that's really what it's called. So does this community seek people to give what's called the QCD gift because of all these changes, and it may change behavior? So is there a push to get people to donate that way because it's still in play and it still has the same tax benefit that it had before One Big Beautiful Bill and after One Big Beautiful Bill? And I'm seeing a lot of people say yes.
Yes.
Yeah, but I think my client is not really aware of how to ask for this kind of donation because it's a little bit technical. So I'm not sure if a lot of people know about giving those options to the donors.
This is great. This is the perfect intersection of where the accountants and the fundraisers can have a meeting of the minds. One of our previous webinars, we actually we discussed the push-pull friction that sometimes, I say sometimes, exists between accountants and fundraisers. As you can see, I love Heather and Graziella and Deep so much. There is no friction whatsoever. But maybe in my past life as a fundraiser, I may not have gotten along with my staff accountant because we don't speak the same language. Now, I love the fact that you're asking about this, Rita. This is one of our fundraisers. Like this is what we absolutely live for. Now I see in the chat, I see April, my good friend April, no relation to Heather or Michelle. April says yes. April, if you want to come off chat and share. But also Karen from Fred Hutch. Yes, thank you, Karen. And Melinda, Becky, Brittany, if you want to just come off of chat, mute and share with Rita some of the language that you've been sharing in your fundraising, that'd be awesome. Again, we're here to be supportive of each other and would love to hear what you have to share.
Thank
April.
you. Thank you, Jennifer. I'm happy to go first or
Yes, yes, please.
however it
Go
may
for
be. Yes, Rita, I think it's education for donors to let them know what the different options are. I did try to put another comment in the chat as well that if there's unless your donor database is really good and you can maybe age target people with a communication by age, that would be great. Otherwise, it's just an educational opportunity. If your nonprofit you're working for has major gift officers, it's also education for them as they're having one-on-one conversations with donors to just have it as another option for a donor to consider with what is best for them and their situation. So that's just the general approach I would suggest is educational.
Amazing. Thank you, April. I saw Becky came off mute. Becky, what do you
I
have for
did.
us?
I even turned on my camera.
Your
Um,
camera is on, my
Finished
friend.
my lunch and turned on my camera. A
Microphone on, camera on. Becky.
couple of things. Yes, we definitely encourage people to give through this channel. 70 and a half is when you are eligible to do it, but when you are required to make minimum distributions, this is when it's really helpful for people. And that used to be 73, but if you were born in 1960, I guess, or later, then it's now 75. So we've kind of gravitated from referring to the required minimum distributions just to the more generic, it's available to anybody over 70 and a half. And that
Wonderful.
number, if you're a donor, that number is, if you have required distributions, that number goes up every year. So it behooves the gift officers to pay attention to those donors, even if it's not a lot of money coming in, but it is a steady stream, and it's a good source. And then the other thing I would say for organizations that have giving and membership, it's important to know that you can't receive any benefits whatsoever if you donate through your retirement fund with a charitable gift.
I love it. Thank you.
Great.
And Heather, did you see what Jen Seva from Washington Trails dropped in
I
the
did.
chat?
Yeah.
Amazing language. Amazing language. This is exactly like what we love. It's just sharing these resources, communication, drop it in your newsletter, put it in your e-blast. This age is now the age of my mom and all her friends. So ironically, my mom, who disavowed me when I chose a fundraising career and not becoming an attorney or a dentist or an accountant, she's now asking me questions about QCDs. Oh,
Yes.
now I'm suddenly best daughter, best daughter.
Well, that was a great question and great conversation. So thank you, everyone. And I will say, so like we talked about with Big Beautiful Bill, we have the individual giving that we've just talked about. The second part that is the most impacted from the bill that impacts our nonprofits is going to be about corporate charitable giving. Right, Deep?
Right, that's right, Heather. So effective for 2026, contributions given by corporations must exceed 1% of taxable income in order to be deductible. Therefore, some corporations may increase donations to get above that amount, while others may completely withdraw.
Strategic partnerships are going to be key, as corporations may choose to bundle the grants in order to have a greater impact. They're likely going to want more guaranteed outcomes and more hands-on involvement in the decisions. So nonprofits need to build on those existing relationships now and seal the deal for the future.
And you're right, Graciela. We're already seeing this. We saw this in the past year, changes to grants and contributions from foundations are getting bundled. And unfortunately, we're seeing a lot of them become more restricted too. There was definitely a wave of them being unrestricted. And the past year, we're seeing more coming in as restricted and even possibly conditional when they list out very specific milestones. And so when you see that, that changes the way that they get accounted for on in revenue. So just something that's important to be thinking about as we're planning for these types of inflows of money. And we've had some corporations we're projecting that some corporations are going to look for ways to change their giving altogether. Now with this floor, it's going to be very hard for our small corporations to meet that floor. So we expect that they'll probably start looking to give as a business expense. So instead of a contribution, they may look to do sponsorship or, even advertising. And that'll be interesting and important for the nonprofit to understand too. A sponsorship is fine. Advertising could have unrelated business income, which could have a tax consequence. That's okay. It's allowable, but it's something that's important to be aware of and to work together to plan. So I would love to ask, we just had a great conversation, but I would love to ask the audience if anyone has been working with corporate donors already about navigating the Big Beautiful Bill. We've already had a couple corporations reach out, which I thought was interesting. And as far as Michelle, I see you're saying, does it matter the size of the corporation? I don't believe it does. I believe that,
Mm.
yeah, and Graziella is agreeing. So, but the corporation, their floor is that 1%. And
Right.
why is foundation giving projected to decline? I don't know that foundation giving is projected to decline, but what we're seeing is we are seeing foundations. Well, let me take that back. So we even saw changes in foundation giving last year. So last year, with all of the uncertainty going around, I felt like a lot of people just kind of froze with giving. And the fundraisers on here, you guys can
And
definitely tell me if you agree with that. But from what we saw on the accounting side, everybody kind of froze to see what the changes were going to be. And then foundations told us that they were just inundated with so many more requests than they had in the past. Some of them were deciding if we gave to you last year, we're definitely not giving to you this year. Some of them have changed their methodology. A lot of times when the government decreases their giving, foundations and will step in. But I think that they couldn't handle that amount, that change in giving. So for 2026, I don't know that we're expecting necessarily foundation giving to go down, but they may change who they're giving it to. They may spread it out or they may bundle. We're seeing a lot of foundations and, even individuals go to giving through DAFs, donor advised funds. That's a whole nother beast that Jennifer and I can do a different webinar on at some point. So I think giving will change, but we're not quite sure how.
Hi, Heather. This is Rita again. Can I just do
Hi.
a quick 2 seconds on a change that I'm seeing at my client that it actually fits what you're saying? They received a fairly large grant from a foundation that was restricted to the program meeting certain conditions and milestones, but then there was added language to say, for example, you're supposed to train 100 people in year one and you will get 100,000. But if you are underperforming, then then you would be deducted for the next year's donation. So it's kind of use it or lose it for the following year two money. And so there's an incentive to really meet the milestone as the org, and the foundation is definitely putting restrictions, conditions to really work for that money. So I am seeing that already in some donations that have come in last month.
Yeah, that's a great point. And I think that your client is actually lucky that they got that wording because what we're seeing is you must meet this milestone or you have to return the money. So it's not even that we'll reduce next year's money, it's that you have to return this money. And that does make it conditional on the accounting side, which completely changes how we present your revenue. And it's making nonprofit accounting revenue side a lot trickier than it used to be.
I had to open up my accounting book from undergrad to figure out how to book it. So,
Right.
and I'm sure Deep will get to see it because you guys are our audit firm. So, look forward to the audit season next month, Deep.
Oh, thanks. Thanks, Rita. And tax time as well.
And Deep, I think you agree. We haven't, so in the Big Beautiful Bill, we're seeing changes related to individuals and corporations laid out, but nothing specific about foundations and endowments. Do you agree with that?
Yeah, I agree. There's nothing related to the one big beautiful bill. There's no changes to foundation and endowment giving, but like we discussed earlier, we are going to see we're going to see some changes in donor behavior.
We do have a quick question about a DAF, and I will say Jennifer and I already talked about this. We could probably do an entire webinar just about DAFs, but we are seeing, I personally, with my clients, I've seen a lot of them getting money from DAFs now. And so a DAF is a donor advised fund. And so what that means is the donor, instead of giving the donor directly to the organization, the donor instead gives it to this donor advised fund. They give them the money. So now that money belongs to that donor advised fund. Then the donor can recommend to the donor advised fund and say, hey, I'd like you to give a contribution to that organization. But it's up to the donor advised fund to actually decide to give it. Now, everything I've seen, the donor advised funds are following the wishes of the donors. I don't think it would really work out if they, stopped following their wishes, but that's just a technical thing. I'm not, I do think people are giving to donor advised funds in order to bundle money, like corporations, for example, if they have to meet that minimum floor, they might give a lot of money in year one to this donor advised fund in order to meet that floor and then have that money distributed over the next several years. Okay, so great talks. I think that actually I am surprised we've spent a lot of time on this, which was great conversation. We'll try to speed through the next couple sections. Um, yeah, actually, Becky, everybody can give through. Yes, everybody can give to donor advised fund. Um,
I'm actually
but we will
surprised,
talk.
Heather, and we
Oh,
will move to the next slide because we're running out of time. And I wanted to give folks more time for their questions too at the end. But I'm surprised how many fundraisers did not come off mute to disagree with your slide that we just saw about corporations declining. I think, again, if you're just going to look at this on paper, the transactional nature of getting the tax benefit from the 1% doesn't make sense. It doesn't, right? I mean, like Microsoft has taxable income upwards of 21 billion, which would mean it would have to itemize up to $210 million to get a charitable deduction according to like just what it looks like on paper, right? Just what it looks like on paper. But fundraisers, we know that it's a relationship. And this is a relationship that we continue to have communication around. We have meetings, we have discussions that we're not going to let what's on paper cloud what's truly philanthropy and giving and the love, the love that we have for making this world a better place. So I'll just make that comment and let's continue on because more exciting stuff for folks that are still awake.
Thank you, Jennifer. Since this is for CP, we'll do another poll right now, and this poll is talking about our state charitable registration requirements. And just curious, Jennifer, what do you think? What's going to be the number of states that people are registered in? Don't cheat and look at the answers. You're muted.
I was getting mad at you because you didn't give me a heads up on this question. So I'm gonna totally hazard a guess. I'm thinking we have one, like one.
Okay. And
I'm
Graziella, I
thinking.
know when I asked you, you said you see the whole gamut, right?
I do. I see anywhere from 0 to 50 listed.
What?
On average, I'd say 6. The most common are New York and California that I see.
Ah, I
Um,
see. What about DMV area? Do you have to register in all three?
Not well, Maryland and Virginia, you have to submit a copy of the 990, but for DC, you do have to register, but you don't have to submit the 990 to DC.
Ah, you tricked me. Okay,
So,
change my
Deep.
answer. Oh, that's right.
So, Deep and Graziella, can you just, 1 minute high level
Sure,
overview?
sure, no problem. What organizations want to be careful of is when they have a donate button on their website. Normally, what that would say is there's a lot of contributions coming in, perhaps small dollar contributions, and organizations need to consider whether they need to register in specific states. You need to look at not only the high donor states, high dollar, but also the frequent donation states. The state AGs are really hot on this issue because they all want their piece of the pie.
That's
Great.
true. Um, and then in order to determine where the nonprofit needs to register, they should really run reports of all donations. Schedule B itself wouldn't be sufficient because it only contains the highest donors that usually donate 5,000 or more.
Yeah.
And then
All right.
the rules are all over the place, so it can be quite daunting. Some of
Yeah.
the other things that we want to look at, if we go to the next slide.
This, I think, I can just sum this up really quickly, just since we
Yeah.
are running out of time.
Yep.
This is one thing that was mentioned in the Big Beautiful Bill, and we are sure that people have heard a lot about this from the news, talking about the different universities. So you have a high level overview of it, right, Deep?
Yeah, I mean, yeah, and this doesn't really affect any of the clients we work with, but now endowment taxes are applied on a sliding scale instead of a flat tax. So some of the most largest universities in the country would be paying endowment taxes at 8% instead of the previous 1.4%, and universities such as Yale, Harvard, and Princeton are already meeting that threshold. But a tax break is given to educational institutions of less than 3,000 students.
So when you've been listening to the news and hearing about the universities, this is some of it, and the Big Beautiful Bill is going to tax those large universities more, their earnings. So it's just something to know about. I think we can just quickly go through this as well.
Sure.
And another thing from Big Beautiful Bill is, like Graziella said earlier, now there's extra tax on any employee making over $1 million in an organization. It used to be capped at the top five, and now it's everyone. So it could be substantial, especially for universities, hospitals that pay those high wages. I think that this is one that we do want to take a minute to talk about, right, Deep? Because it is a midterm election. So, why don't actually, Lexi, we have another polling question. And this question is just, does your organization engage in advocacy activities? And it's a yes and no, not currently. And then the question is not sure, and what is advocacy, right? And so, Deep, we were talking about this, saying, I guess in order to answer this poll, we really need to know what advocacy is and what the difference is between advocacy, lobbying, and political activity. So, can you give us some definitions, please?
Sure. Just a quick rundown. So advocacy is basically education and influencing public opinion, and it's completely allowable for all types of nonprofits. Then you have lobbying, which is influencing legislation in order to get a law passed. And C3 organizations can participate in lobbying, but there are limited amounts of lobbying they can do. And then C4s and C6s have no limits. They can do unlimited lobbying. And then political activities. So this is supporting and endorsing candidates running for federal, state, or local office. So C3s are absolutely not allowed to participate in political activities whatsoever. But C4, C6s, and other non-C3s, they can participate in political activities, but there are tax consequences if they do so.
So really what you want to do here, since there's absolutely zero, zilch, no political campaign activities allowed at all for C3s. The first thing to do is educate the staff and review the social media communications before they go out to try to avoid this.
Yeah, and Camilla, you're right. I see your question. This has not changed with the big beautiful bill. It's just it is a midterm election, and this could have tax consequences if you're a non-C3 and you're doing political activity. So we did just want to give this reminder. If you are a C3 doing political activity, it could actually impact your tax exemption status. So that's why we want to make it so clear that a C3 is not allowed to do it. But keep up the great work with advocacy. That is absolutely allowed. I think the other thing that we're seeing, again, not an update, this is not new for the big beautiful bill, but we're seeing clients, we're seeing nonprofits dip their toe or looking at events or activities that could have an unrelated business income component because of this revenue diversification that people are looking to do. So we wanted to spend a few minutes talking about this, right, Deep?
Yeah,
Yeah.
I mean, yeah, I would say this is a common issue, and we could see this more as organizations are working towards diversifying their revenue streams.
What I see the most is advertising as the common UBI activity, where there's very specific rules for advertising, which is different than sponsorships. If you think of a football stadium and you see all around the arena banners of names of organizations, United Airlines, Heineken, Coca-Cola, those are sponsorship, and that's not UBI, so it's not taxable. It's considered a contribution. But if you think about like a trade magazine that gets issued and there's advertising inside of it, that's very similar to what you would see in a catalog like Vogue, Newsweek, Time, and so forth. Call to action, that's unrelated business income, that's advertising, and that's taxable.
Yeah, and this leads to we got a question in advance talking about special events too, which I'm sure a lot of you are very familiar with. And Deep, can you just give us kind of a definition of what a special event is? And then, if there are things that we need to look out for as far as unrelated business income.
Yeah, so a special event is typically a fundraising event where an attendee would need to purchase a ticket to attend an event such as a gala or an awards event. In my experience, this rarely triggers UBIT, but there are a few instances where I've seen it trigger UBIT. So, for example, if you have advertisements in the event brochure, and in those advertisements, it's pretty much promoting sponsors. There's call to action that could trigger UBI, or if there's merchandise sales and the merchandise is really not really just has an organization's logo and is not promoting their mission or providing educational information, that could trigger UBIT.
And we have a question from Rita about advertising on social media and Facebook. And it's just important to make sure we're talking about the revenue side of advertising. You can expense your if you're paying for advertising, that's fine. We're talking about if you are charging somebody to advertise. Okay. All right. Great. And so I think last but not least, since we just have a few minutes, we've been getting a lot of calls about, especially actually more last year, but this year has just started really just talking about, things people have heard in the news and, oh, are there risks to tax exempt status? And so we really wanted to, I think we've covered some of them with the political activity. I know Deep and Graziella are big about saying, please file your 990s on time or with your extension. That's actually the number one reason to lose your status if you don't file for 3 years in a row. And luckily, that's an easy one to avoid, right? Just file your 990. And then what we've really been trying to talk about in this session too is mission drift. And I think we kind of want to end it with this. It just is a reminder to that the work you're doing needs to stay in line with why your organization got their exemption status in the first place. And so as you're looking into new revenue sources, talking to new donors, entering new campaigns, it's never a bad idea to just make sure to look back at what your exemption purpose is and make sure that you're still in line with that. Right, Deep Graziella, if you have anything else to add, please do.
I think a gift acceptance policy can be very helpful in that manner, and that it's predetermined what the organization's willing or unwilling to accept, as opposed to trying to make the decision in the heat of the moment. Like if somebody grants you a piece of land, you don't have all the details, management accepts it. On the back end, they find out that it's contaminated and EPA is on top of it and so forth. You don't want to have to deal with that. That's not the business you're in. So gift acceptance policy can help.
And I'll
Yeah.
say I hear that from our fundraisers all the time and our development officers. They always want a gift acceptance policy. It helps to know what you are able to give. So I'm sure Jennifer, you're probably like, yes, definitely give that to us.
Oh yeah, and then one thing to add real quick, and related to policies, is that there are several questions on the Form 990 and related schedules that asks about the organization's policies. So this helps achieve transparency, and it shows the public that the nonprofit is well protected and compliant.
Good
Excellent.
point.
Excellent. And we're happy to continue the discussion, but I do just want to put up some contact information. And I want to thank our panelists, the great Jennifer Lee Dodson and Graziella and Deep. It was a great talk, and thank you to so many of you who joined in and participated. I really appreciated hearing that conversation. We'd love to keep that conversation going. And we are doing these webinars monthly, along with quarterly roundtables, however we can help the nonprofit community. So I invite you all to join and, be a part of it. And this recording, I see somebody asked, this recording or this webinar is recorded, and we'll be sending it out within a week or so, probably less, with the slide deck as well. So you'll get the presentation and the recording, and it will also it'll go out to everybody who registered, who's on the nonprofit site, and it'll be on our LinkedIn and YouTube, and we'll of course share it with Jennifer and Michelle too to be distributed. And if you need CPE credit, I don't want Lexi to get mad at me. So if you need CPE credit or if you'd like to give feedback, just stay on after this is over and there'll be a brief survey to fill out. So any last comments, Jennifer, before we head out?
No,
Actually,
great.
I had
Thank
one more
you.
question, Jennifer, if I may, if we had
Oh,
1
who's
minute.
that?
Please.
Sure.
Oh, go
Oh,
ahead.
Rita,
Okay, great.
my outspoken accountant friend.
Yes. And it's a really quick question. It's really for the people who are looking for donations. I didn't see in the deck that was in the One Big Beautiful Bill, the SALT change, where those of us who live in a state that we have to pay and we deduct our property tax and real estate tax, that threshold has been lifted, and it's going to give me a bigger tax refund than I normally would have received. So for those people where donors are in a SALT state, that maybe you can ask them, that extra refund you got, maybe you could donate it to our organizations. Just didn't know if everybody was aware of that change as well. I don't know if you want to talk, like, do a 30-second on it, Deep.
That's a great piece
Yeah.
of input. We didn't address that on our side because we're looking at it more from the nonprofit organization, but I agree with you. If you know that people are getting that, what a great message. Hey, would you like to donate that?
Yeah, I mean, from a tax perspective, I don't really have anything to add from that perspective. I'm just wondering from like a fundraising perspective, are there any additional thoughts on that?
Deep, are you looking at me to answer?
Yeah.
Wah, we're out of
Yes, I
time.
am.
Sorry. Bye. No,
Well,
these are
Jennifer,
the-
I am looking at you because Camilla said that this was not boring. So I am
I
looking
am
at you.
so glad that Camilla said that. I think she's trying to get CPE credits, to tell you the truth. I'm kidding. I'm kidding. No, the SALT states, Kansas, Louisiana, Michigan, New York, Ohio, Texas, Utah. Is that what we're speaking of?
No, Texas is not there. I'm from Texas. They
No.
don't have state tax.
Okay, so I
They
am
don't,
not
but
up to
other
date
states
on
are,
SALT states. Now that I'm in Washington and this has not been a conversation that I've had, I'll have to circle back on that.
Great. But thank you, Rita. Thank you for the participation.
All
And
those
Lexi,
zingers
I
from
think-
Rita. I love
Yeah.
it.
I know.
So
And
good.
so thank you again, Jennifer and Michelle, for coming on to Deep and Graziella. And Lexi, I know
Thank you.
you want to post that survey now, right?
Yes,
So if you need
ma'am.
CPE credit, please be sure to fill it out.
Thanks, everyone.
Thank you,
Thank you.
everyone.